Welcome to ETF.com video series. I am Cynthia Murphy, Managing Editor at ETF.com, and I'm here today with Charles Ragauss, Managing Director at Exponential ETFs. We're at Inside ETFs in sunny Florida. The conference is kicking off today. What are some of the themes, topics you're most excited about this year?
Well, Inside ETFs is always very exciting, mainly because everyone from the ETF industry comes here every year. There are a lot of great panels going on right now, like how to start an ETF or how they fit into your allocation, how to distribute. A lot of great content, but for me personally, I just love that everyone's in one place and I get to catch up, see what's going on in the industry and what other people are doing.
Yeah, we like to say it's the who's who of the ETF industry
Exactly.
gets together here every year. So let's talk about Exponential ETFs. You guys have two proprietary products, but you've really been growing a lot on the sub-advisory side of the business. As an ETF issuer, why become an ETF sub-advisor too? What's the opportunity there?
Sure. So when we built, Exponential ETFs, we built it to be a scalable business. So when we add on portfolios, it's not a huge burden for us. It's very scalable. And as we did that, we realized that excess capacity at the portfolio management level could easily be, applied or help other ETFs come to market. So that was really the genesis of it. We've had people approach us very frequently, and they like what we're doing. They like the platform. They like the people. They like our reputation in the industry, and that's kind of what started this whole thing.
And you guys work with all asset classes, just equities, because your proprietary funds are both equity funds. Is there an expertise here?
So, we don't specifically look for any kind of fund. As you mentioned, we do trade equities. We trade both domestic, international developed, international emerging. We trade fixed income, currencies, derivatives, all of that we have experience trading. So we don't specifically look for one asset class versus another. What we really try to focus on is the service we provide and how that positively impacts both the sponsoring advisor, but more importantly, how it also positively impacts the shareholder.
Well, so to talk about that, a lot of investors don't even know if they have an ETF from a specific brand and it has a separate sub-advisor. A lot of them don't even know that there's a sub-advisor. It's kind of like a quiet role.
Yes.
How does the sub-advisor impact the ETF investor?
As you said, most investors have no idea what's going on behind the scenes. They have no idea there's a sub-advisor, and to be honest, that's fine. Positive impacts that we bring to them, they'll never know. Things that we try to focus on are tax management or eliminating capital gains, cash management, working with authorized participants in capital markets to make sure that spreads are very thin or not thin, but tight, so that way when you're trading, you're not spending excess money. So we do a lot of things behind the scenes that the end investor never actually knows about. But one thing I always like to focus on when it comes to having a sub-advisor is there's a potential extra layer of compliance and risk review. All managers, whether they're sub-advisor or sponsoring advisor, have a code of ethics and compliance manual and follow what the SEC says. When you're using a fund that does have a sub-advisor, you have the compliance program of the sub-advisor, you have the compliance program of the advisor, and you have the overlying trust as well. So there's an extra layer of compliance, protection, and review. Of course, that doesn't guarantee against anything, but it's a whole nother level that you otherwise wouldn't have. And I always like to point that out because it's not something people often think about.
Oh, good point. So let's talk a little bit about your proprietary products. ACSI is your biggest fund. It's a U.S. large cap equity fund that looks at customer satisfaction rating. It's a really unique screen. The other one is our VRS, which is a reverse S&P 500 portfolio. Again, a unique way to slice and dice the equity space. How is it going for you guys?
So far, it's been fantastic. I think there's been a lot of buzz and excitement about the products. People are waiting for a longer track record, which is normal. But generally speaking, that hasn't necessarily turned people off. They're trying to wait for a great time to fit it into their asset allocation models and their portfolios. But generally speaking, there's, again, a lot of excitement and a lot of questions. People want to know more about it because, the American Customer Satisfaction ETF is different. It's, hopefully displugged or unplugged, I should say, from the normal financial metrics that people use. And then the reverse cap, while a little more normalized in terms of the ETF space, is still a relatively new concept. So people are waiting for a track record. But, again, very exciting. People are asking a lot of questions. It's been overall very positive.
Excellent. Well, with that, thank you for joining me today.
Thank you.
Enjoy the conference. Thank you all for joining us today.